This is probably one of the most important trading videos you'll probably ever watch on YouTube, because in this video I'm about to break down the simple strategy that I use on a consistent day-by-day basis, which you can clearly see this was the trade that I took this morning. How I'm taking the S&P 500. This one trade alone made me over $10,000. This is the exact execution that I showed on my Instagram. Make sure you guys are following me on Instagram. That's where I post all my winning trades, losing trades, payouts, everything like that. So make sure to follow me there. But it was the exact trade I took. You can clearly see bottom taking the S&P 500, making over $2,000 across $750,000 worth of funding. 2 years ago, I was making $10,000 a year. Being in this position 2 years later to be able to have a skill set that makes me $10,000 in a day is a true blessing. In this video, I'm gonna give you guys the 3-step roadmap that I look for on a consistent day-by-day basis to hit on trades just like these consistently. And if you get value from this video and you want to work with me one-on-one, I do have a coaching program where I teach people that are either beginners completely coming into trading or people who've been trading for some time yet are still unprofitable. I help them become consistent within the next 6 to 12 months. And some of the results here that we get for students, you can clearly see Griffin here made a little over $11,000. He's been a part of Spark for a couple months now. You can see other students like Nene, she's been with Spark for almost a year now, hitting consistently, as well as other students completing the homework, staying the markets a lot more, and so much. If you get value from this video and you want to trade live with me every single morning, as well as access to one-on-one coaching to help you become consistent within the next 6 to 12 months, the first subscription, book a free call. Talk to me personally, no one else, see where you're at in your trading journey and how I can help you. So the first step of what I do on a consistent day-by-day basis is I do a top-down analysis. I go from the higher time frames to the lower time frames, create what I call my daily bias. It's pretty simple. I'm about to break it down. So daily bias composes of 3 things. Where have we been? Where we're currently at? Where are we anticipating price to go next? So when it comes to higher time frames, you want to mark out areas of liquidity as well as areas of inefficiency. First thing that I can possibly take note of is obviously this low right here as a level of liquidity. This is the Sunday low. This is where the market opened up. Right here, this is the previous weekly low. This is where last week closed. So that's the previous weekly low. Up here, we can take note of this high up here. This is the previous daily high. This right here is the high of day, right? This is where the market opened up. And we can also take note of this high up here, right? Previous weekly highs up there. As well as when it comes to levels of inefficiency, you want to take note of fair value gaps and order blocks. An order block is pretty simple. In this case scenario, you can clearly see this was the last up close candle before we had this massive drop to the downside. This right here would be referenced as an order block, right? It was a last close candle before we seen strong volatility come into the market. Same thing right here. This would also be an order block. Last up close candle before we seen strong volatility come into the market. It's very simple and easy to understand. So right here on the 4-hour time frames, we took note of our liquidity pools, as well as we took note of a few order blocks, as well as these order blocks. Next thing that I want to take note of is this fair value gap. Check this out in blue here, and a fair value gap is pretty simple. It's the separation between where this candle closed and where this candlestick opens up. You can clearly see it creates a gap within the markets. Fair value gaps are like magnets. Whenever price sees an expansion lower and it creates a fair value gap, once price finds a level of support, usually refers back into those fair value gaps. This is where we're going to get into that second step coming up. At this point on the 4-hour time frames, I'm simply just creating my story, creating my picture. We've seen a drop to the downside. We've come lower to take out areas of liquidity. And we have areas of inefficiencies above us, fair value gaps and order blocks. As we progress through the video, it's all going to make sense step by step by step. So now we're going to go down to the 1 hour's time frame. Well, on the 1 hour's time frame here, it's pretty simple. It's just doing the exact same thing. Marking out areas of liquidity, marking out areas of inefficiency. Here we can take note of this fair value gap. This is an inversion fair value gap. This was once a level of resistance right here. You can clearly see price breaks through and now price is revisiting the same fair value gap level. This is referenced as an inversion fair value gap. Above us, we can take note of what we call a nested fair value gap. So this right here is that 4-hour fair value gap, if you guys remember. But within this 4-hour fair value gap, you can see we have this 1-hour fair value gap, plus we have that 4-hour order block above us. We can also take note of some liquidity pools. We can take note of this low right here, which you can clearly see price had came lower to take out, as well as we can take note of these highs right here, which you can also see this came higher to take out before seeing this drop lower. Once we have our top-down analysis in place, this gets us into our second step, which is creating our bridge. So when it comes to creating a bridge, it's pretty simple. There's 2 specific levels. There's a starting point, then there's an end point. My goal on a consistent day-by-day basis is to understand where does price start, where does price want to go? There's nothing else to it. The market can either go higher or it can go lower. Either price starts by opening up, going higher to seeing it go lower, vice versa. Price opens up to go lower to find support to go higher. These are the two consistent ways that I trade on a consistent day-by-day basis. But when it comes to where price starts, it's reference to liquidity as well as it's reference to inefficiencies. There's two specific levels. So either price is going to find support within this inversion fair value gap to find a level of support to go higher, or maybe price will open up, go lower to take out this liquidity pool, find support to go higher. Note of this low right here as a level of liquidity, as well as when it comes to overall, where is price anticipating to go next? Same thing, liquidity or inefficiency. So we can take note of a few levels. We can take note of this high right here, take note of this high right here, as well as we can take note of this fair value gap on the 1 hour right here. Pay close attention to this fair value gap because we're going to reference it later on in this video. So my overall emphasis is I want to see either the market open up, find support within this inversion fair value gap to reach back above these higher prices, or is the market going to open up, come lower, take out this level of liquidity to find support to go higher. Coming into a marketplace today, I was anticipating higher prices, right? If you're looking to short within the markets, you want to be shorting up here, you want to be shorting right here in the middle of the range. When the market is already down here, I'm not looking to short down here. If it were to open up and go down here, then it would not necessarily matter to me because that's not the idea that I'm looking for. I'm anticipating that this push lower was simply a push lower, find a level of support here, then eventually see a rally back higher. That's the overall emphasis that I'm looking for on this day and what I'm anticipating to happen. So now I'm going to go down to the 15 minutes time frame. This gets us into our third step, which is utilizing time and confirmation. So time is when are we specifically going to trade? So I trade between 9:30 a.m. the stock market exchange open, 12 p.m. EST. This is when lunch happens. So this is the specific time interval on the 15 minutes time frame that I'm going to be looking for a specific setup. I created my top-down analysis. I marked out all the higher time frame liquidity pools as well as inefficiencies, created my bridge. I'm anticipating higher prices. I'm looking for price to start here because right here is that inversion fair value gap I talked about, right? Whether price opens up or rallies to the upside from this inversion fair value gap, that would be a setup, or whether price opens up, comes lower, takes out this liquidity pool and then reverses from it, that would also be a setup. And I'm anticipating higher prices to come back into this area of liquidity right here, this area of liquidity right here, and back up into this fair value gap. I'm not trying to predict the markets. I'm not trying to be perfect in the markets. I'm simply creating a picture on a consistent day-by-day basis, because you have to understand the market is not always going to look the same every single day. Some days there might be a liquidity sweep for a reversal. Some days it might trend higher. Some days it might even consolidate. The market looks different on a consistent day-by-day basis. So if you're just trading one way every single day, you're not going to be consistently profitable. There's a particular story that price creates every single day. For today's story, I'm anticipating higher prices. Already seen a drop to the downside. We're already within a support level. The right confirmation basically telling me that price is finding support here, and if I can get the right confirmations, which I'm going to break down later into the video, then I can frame my overall idea of reaching back above liquidity pools and inefficiency. This is how the market operates on a consistent day-by-day basis. Don't try to be better than the markets. Don't try to be perfect. Don't try to trade the exact same way. Liquidity sweep, breaker structure, fair value gap. That way of trading is not going to work, because sometimes price may create a liquidity sweep, breaker structure, fair value gap, and still lose because it's in a downtrend. Trade what the market tells you. Market is telling me it went lower. It's telling me it's in a support level. It's telling me there's fair value gaps and liquidity up here. I'm not looking to sell here. I'm looking for price to tell me that it wants to buy here. Confirmation would be a breakout, right? We can take note of this original high point right here. If I can see the market open up here, find support, break through this level, then this would be a breakout signature and I would frame along, reaching back above these liquidity pools, reaching back above this fair value gap. That's a breakout. Reason why this breakout may work is because price has already came down into and tapped into this inversion fair value gap. We've tapped into a level of support here, and from tapping into this level of support, and now as the market opens up, could potentially break out from this support level. So that's our first idea. The second idea is our manipulation. This is where price opens up, is lower, either takes out this low right here, or even come lower to take out this low down here. And then from then, I want to see price reverse from it, reach back above higher price. Always want to give yourself two scenarios for what the market can do. 9:30 opened up, was very patient around this time, did not take a single trade, just being patient, seeing the market open up and go lower. A lot of people would have taken this trade here, and they probably would have thought this was like a day trade, right? Taking this trade here, reaching all the way back below these lows or something. It's not what I was looking for. I'm looking for longs, right? It's very important that you stick to your higher time frame buys. I'm looking for buys. I'm seeing this drop lower simply as a manipulation to give me the opportunity to buy. So this is why it's important that before you ever take a trade, you have to create a plan, because if you were in this situation, you probably would have chased the market down here thinking it was going to go lower, not understanding that we're within a liquidity pool as well as we're within this higher time frame support level. So this is why it's important to create a plan before you ever place a trade. You can clearly see right here 9:45, see price came lower once again, out this original low right here, and then we seen this immediate reversal to the upside, see a strong push away from it. This validates as a liquidity sweep. The reason why this validates as a liquidity sweep is because price did not spend a lot of time here. The moment that price took out this low, it immediately ran away from it. This is how you know that it's a liquidity sweep. And I see price come down here, find a level of support, immediately run away from it. First entry was right here, basically at this original low, stop loss all the way back up here. At this point, I went down to the 5 minutes time frame, and this is where I scaled into my position, basically adding to my winning trade. Added to my winning trade when I started seeing price break above levels of resistance. So we have this bearish fair value gap as well as this bearish fair value gap up here. The ultimate confirmation that you can get within the markets is inversions, because this validates a reversal taking place. This is a bearish fair value gap. It's supposed to be a level of resistance, but the fact that the market is breaking through it, the strong displacement, gives you the idea that it does not want to find support here. At this point, once price kind of breaks through these levels, I was able to add to my winning position. So this originally was around 10 contracts. I added 5 more contracts to this trade idea right here, adjusting my stop loss back below this low. So whenever I scale into my trade, I adjust my stop loss, basically maximizing my winner while keeping my loss still very small. This is how you utilize proper risk management. Like I mentioned, I was reaching back above this high point right here. Obviously, full goal was reaching back up into this fair value gap all the way back up here. This push alone coming back into this high point right here made me a little over $10,000. So I was completely comfortable with that trade. But obviously, if I would have held all the way back into that fair value gap, this would have probably been like a $30,000, $40,000 trade or something crazy. You can clearly see coming all the way back into that fair value gap plus that 4-hour order block. This is currently where the market is at, way back up here perfectly, and you can clearly see bottom ticking the exact low. If I knew price was gonna reverse like this, I would have probably held the whole trade, but don't get greedy. I made $10,000 in a day. I used to make that in a year. Completely comfortable with that, really happy with that. Great trading day, and I really hope you guys got a lot of value from this YouTube video. It isn't like most YouTube videos. It's not overly edited, lasers here, Lamborghini here. Like, no, this is real trading education. I'm an actual real-time full-time trader, and obviously when it comes to these trading videos, very educational. They're very boring. It's not reality of trading is boring. It's doing the same thing on a consistent day-by-day basis. It's creating a plan, staying disciplined, and it's staying consistent. Not a lot of people are going to tell you that, because it's easier to tell you that just have an 80% win rate strategy. Buy my course, have my 80% win rate strategy, and you'll make Lamborghini next week. It's easier for me to tell you that, but that's not the reality of it. Trading takes time. It's very difficult. You're going to suck at it. If you continue through the course and you get real advice from real full-time traders, and even coaching from a real full-time trader, anyone watching this video can become a consistently profitable trader, and even a full-time trader. Not overnight, but it's a lot quicker. It took me 2 years to achieve this goal. I help my students achieve it in 6 to 12 months. Just because having to piece all these different puzzles between risk management, psychology, journaling, building out a training system, training like a business LLC, like all these things I had to figure out on my own and piece it together. And I created Spark, putting it all in one area for my students to go through a step-by-step blueprint becoming full-time traders. If you're someone who watched this video, you got a lot of value from it, and you want to trade live with me every single morning and catch awesome trades like these, as well as one-on-one coaching and help you to where you're currently at, becoming a consistently profitable trader, whether making your first $1,000, $5,000, $10,000, or even becoming a full-time trader in a year, click the first in the description, book a free call, talk to me personally. I don't have a sales team, I don't have nothing like that. Talk to me personally, let me see where you're at in your trading journey, and let me help you develop a plan getting one step closer to those trading goals. So that's gonna be it for video. If you want to watch another video breaks down the exact strategy that helped me turn $100 working at Lowe's to over $184,000 in payouts within the span of 2 years, that video is about to pop up right now. One of my best videos. You should definitely watch that after this. I'm your mentor, Arkhamtrades. Be safe.